Give me a yes if you can. Good, good. Small crowd today. I wonder if people got that. I should have mentioned something about the daylight saving times. I didn't even know before the weekend, but I wonder if we're gonna have people coming in a little bit late and a lot of people missing today's session. Yeah, I didn't realize too until I actually got something in the mail from a friend of mine who's a realtor and was like, I was like, hey, my friend's on this brochure or whatever, and she was holding. I'm like, why is she holding the clock? And there's a big thing that says, don't forget to turn your clock. I'm like, oh. I I slept right through it anyway. It didn't matter for me. I was caught up on some sleep over the weekend, so it did not affect me at all. But that's typically. I remember the last time we had our daylight saving time. I think everyone missed the live room session, so we may see that again today. But we do have a small crowd in here, so we could talk about some things. Originally, I was going to talk about. I told you guys I would talk about the inside bar strategy I was looking at. But is there something specific you guys wanted to discuss today, or did you want to hear about that? Did you not want to hear about it? It's nothing major, but it kind of talks about the process of developing a strategy. But it's your show, so you guys call the shots. If there's something that you want to talk about, let me know. If you guys did want to hear about the inside bar thing that we talked about in the live room last week, let me know as well. If you don't, it's not a big deal. Again, I won't really have time to dig deep into it till the summer. Was Darren pretty upset over Sporting KC yesterday, not pulling off that win? Did he come in a deep dark mood, yelling at everyone? He said we could start. Okay, well that was the original plan. Again, I don't know. We don't have a lot of people in the room today, so who knows if that will continue. But we mentioned the other day in our live trading room about inside bar technique, and we started off. I don't know how we got on the topic. We're talking about. I think we're talking about strategy development. We're talking about non-farm payroll strategy development and how just the different steps you go through. And I talked about an inside bar strategy, and really how developing a strategy is not too hard, especially if you know the if-then thought process. At the end of the day, you want to relate everything to that if-then thought process. If this, then do that. You want to have strict rules. You don't want to, well, sometimes, maybe, kind of, sort of. You want to have strict rules. But it is a process that takes a long time, and well, in all honesty, most of the time you fail. Most of the time you'll have a brilliant idea, you'll look at it, you'll try to trade it. Hopefully you test it before you try to trade it. It'll work for a little bit, but it'll fail over time. And back in the day, when I was one of those traders that was just trading essentially every type of strategy out there, one of the few that really caught my attention and worked was the inside bar strategy. And again, the inside bar strategy works like this: you have a mother bar like this. So this will be your previous bar. And what happens is you get your next bar. Yeah, they said they call it the mother bar because the second bar is inside it. The mother bar is like protective of it. I never knew that. And the second bar is inside of it, like that. Is fully inside of this mother bar. And traditionally, the inside bar strategies like this, what you would do is you would bracket your orders. Let's say here's your high, here's your low of the mother bar. Whichever way the market breaks out, you would get long or short that direction. So if you would break out this way, you would get a short opportunity to the downside. You'd have sell stops down here. If you broke out to the upside, you would have buy stops trying to trade it up. So essentially, you're playing the breakout. So if we were to look at that just on a chart here, we can. There's a million of these things. I'm on the daily chart. Here's a good example right here. You have. Let's see if I can zoom this thing up. You have right here. There's a lot of them. Let's just make it easier looking one. There you go, right here. here's the bracket of this would be your mother bar, right? You have your high of your mother bar right here. You have your close of your mother bar right here. And you can see this bar right here is completely inside of the range of this bar. You guys see that? Give me a yes if you do. These two bars right here. Yep. And what you would do is you would play whichever way it breaks out. You would have a stop order, like I said, stop order right above the highs of this candle, a buy stop. So you'd be looking to get long. If you broke out to this side, you'd be looking to get short if you broke out to this side. Now, what are you guys noticing in this particular scenario with the next bar? What happens? What are you seeing here? What does this bar do? Right? We kind of break out to both sides, right? Yeah, so you kind of get a false breakout. You're most likely stopped out. Now, again, we don't know which way it occurred, but we're most likely stopped out because traditionally, if you get filled long here, this becomes your stop order right below this other bar, and vice versa. If you get short here, this becomes your stop order. So if you got triggered this and we came back up, well, now you're stopped out. If you got triggered this and we came back down, now you're stopped out. So this would be an example of a losing trade, right? We can put a big box around this one. This would be a losing trade. Now you do have another one right after it too, which represents a winning trade. You actually have two inside bars. You have one right here, this being your mother bar. You can see this bar completely inside of it. And then inside of this bar is actually another mother bar. Like that, with this bar being completely inside of it. This one, big breakout to the upside, right? So this would be a pain-free winner, correct? And again, just give me a yes to make sure you guys are sitting with it. Yeah. So the first thing I always do when looking at a strategy, I do the eye test because I've back tested a lot, and I've wasted a lot of time back testing. Meaning, I've thought of brilliant ideas, and I've back tested it, spent hours and hours and weeks doing it, and then realize it doesn't work. Sometimes it doesn't work at all. It's not even close to being profitable. So the first thing I want to do is I want to do the eye test. So I just want to scroll through, and I want to see how many times this inside bar deal occurs. And I did this the other day. And I noticed we had a lot of scenarios like this first one, where if you're using an aggressive stop order, sometimes you get a little whipsaw where the wick will get you into the trade and then it'll stop you out. Now, I haven't compared that to how many times it explodes right back up. Like I said, I haven't done any real testing on it, but just doing the eye test. But one filter, and this is the part of the back test, you keep adding filters. One filter that I looked to add was to say, hey, instead of just putting a buy stop order there or a sell stop order there, all right, dollar cat, there we go. Instead of just putting a buy stop order or a sell stop order, why don't I wait for the break and close above? You know, we wait for the break and close and everything else we teach, right? We're structured. We always talk about higher high, higher close. What if I were to wait for the break and close above before getting long or short? Would that make a difference? I'm just going to scroll to random points in this chart and see if we can find some examples. Like I said, there are a lot of inside bar examples out there. And hopefully by waiting for those break and closes, we can filter a lot of those opportunities. So let's just do an eye test. Let's go right through. We have an inside bar right here. Bang, this red bar. We're bracking it off. Here goes the highs, here go the lows. We're waiting for the break and close. Here's a break right here. Break and close doesn't come until this bar. Well, do we rally bullish after this bar? Looks like we do, right? Nice little rally up there. Another example. Inside bar, nope, not that one, right here. If you guys can see it. And if you can't, just let me know. Here's our mother bar. Here's our inside bar. You can see we get that false breakout to the upside. You guys see that false breakout? Give me a yes. With this wick right here. Yep. But again, we're not waiting for just the buy stop. We're waiting for a break and close below. Excuse me. which is going to come right here, break and close below. Oh, what do we get? Look at that. We get a move down. Same thing here. We can keep going again. It happens a lot. This is why this is something I would do on a daily chart where I don't have to watch it that much. Inside our mother bar, inside bar. Nope. Break and close below that. Break and close above. Excuse me. That high is right here. Nice little rally. Right. You can even get another one right here. Boom. Boom. False breakout. Let me just change. Maybe that changes my pointer. False breakout to the downside here, right? We don't get involved, so we're waiting for a break and close above. Break and close above comes right here, right? We see our move up. Same thing here. Boom. Nope, that's not an inside bar. Take that back. Nope. Look for our next one. Look for our next one. Right here. Mother bar. Nope, this one's a little bit below it, I think. So not going to count that. There, I know Todd wrote one, Charles. But it had slightly different. I had on my chart. It had slightly different. Well, it looked slightly different than what I was looking for. I don't know why. The same thing right here. Look at that. Inside bar. You guys see it? Oops. Where's my mother bar? Yeah. So maybe I'm like I said, might not have been the one you wrote. Might have been the one he wrote, but I just lost my deal here. There we go. Look at that. Mother bar. Inside bar. You get your break and close right there. Boom. Rally down. You guys see how that break and close below is adding a little bit of a safety net. It's you know it's keeping you out of some of those false moves. If you have one, Charles, let me know. I had one from Todd. I asked for him to write me one a while ago. It was in here. So I have inside bar mod and inside bar plain, but something was weird about it that I didn't understand. It was, I don't know. Todd always does fancy stuff to it, so he probably made some. I don't know. Maybe I didn't mess with the settings. Probably blow up my computer doing this. I don't remember. It was a long time ago. I only had the inside part, but no close below. Yeah, I think that's what. Well, the traditional rules when you hear about it is just the break. It's not the close doesn't matter at all. So I think that's what the one that Todd wrote. I think that's what his indicator did as well. It was just as long as it spikes below it, it's fine. I just started looking at the close the other day because I was getting a lot of false breakouts. I was getting a lot of false breakouts, and I was saying, well, is there a way that I can add a little bit of a filter? I was also thinking about just myself as a trader, whereas, if being a little selfish here, if I'm going to trade this, right, guys, I want this to be a higher time frame strategy. I want this to be something that is on the daily, something I can come in once a day and say, look at my chart and say, I mean, think about it like this, right? If you're trading, this is the daily time frame. So we get 1 bar per day. So we're already going to know there's an inside bar, right? We're going to know there's an inside bar a day in advance. So say we get our inside bar on today, on Monday, right? We already know, okay, there was an inside bar on Monday. My only job on Tuesday is to see if we break and close below. I can easily set up my schedule to check my charts at 5 o'clock or whatever time it is when your bar is closed. Say, is there a break and close below? And if not, get short at market, right? It's that simple. I don't have to worry about putting a buy stop order there and then maybe it getting filled during the day, but then reversing back up and hitting my other order. And then I have to adjust my first order so I don't get reversed and whipsawed. No, I come back. I say, I use an example like this. I say, all right, look, what do we have right here? Okay, we got our mother bar. Doesn't mean much yet. Boom. Okay, Akil, we have an inside bar. So let me bracket here. Let me bracket there. My only job the next day to see is if we get a break and close. So let me make sure I'm in front of my computer at 5 o'clock. Do we get a break or close either up or down? Nope. All right, let me check the next day. Look at that, break and close. What do? I sell at market. So I'm short right here, right at this red line. Short right at this red line. My stops are somewhere above the, right above the, I guess the highs in this case of the mother bar. And now the market takes me for a wild ride. Hey, welcome, Vern. Just doing a little Monday Q&A. Mondays are typically the closed door session where we just chat whatever questions 12-week transformation members have, whatever is maybe bothering them, whatever they find a little difficult to learn. Perfect chance to bring it up in Monday's session, and we can dig into it a little bit in detail. Just talking about inside bar trading strategy today. Nothing that's in the 12-week transformation, but we're at a point where we just graduated a lot of traders. So the questions sort of dry up. People, the more people get it, the worse it makes for these Q&As. Isn't that something, right? The better job we do of teaching this stuff, the worse it makes for the Q&As. It's like, hey guys, you have any questions about structure? Nope, crystal clear. All right. Now Jimmy says, this would be more of a long-term investing. What kind of stop loss and range were you looking for? It wouldn't be long-term investing. More of a position trade. You're looking, I mean, you're probably carrying these trades for days. When I think investing, and I'm real particular with these words. When I think investing, I'm thinking you're taking personal stake in the company. Investing is more fundamental. So for some reason, if you get long euro, there's something fundamental that makes you want to be long euro for the long haul. And I'm talking months to years. So it's still trading because we're not picking a side. We're not saying, hey, I only want to get short or I only want to get long. We're taking it whichever it is, but it's more of a position trading strategy, something that you're going to hold for days, possibly weeks, just because it's on the daily chart. We never know. You can see this candle, 2 days we rally down. Sometimes it may be longer than that. The problem is here's the next step, right? And again, this is why it's a process. I think we can all agree that I just showed you guys. We just walked through and we saw what, 4 or 5 examples of how this works, right? Would you guys agree that this, at first glance, eye test again, this is something that probably just the entry technique seems like it would work? I mean, we can scroll through and find some more inside bars if we want. Here's one right here. Here's our high. Here's our low. Break and close above. Let's see if this wins. Nope. Here will be a loser right here. And you get one down here. Boom. Boom. You enter right here. Right back up and got a winner. So like anything, it doesn't work 100% of the time. But scrolling through examples, it looks like it works more than it doesn't work. Here's another example. Waiting for the break and close. We save ourselves from this false breakout down here. We're not filled on sell stops. We get a higher high, higher close. We would enter up here. Let's see if this wins. It goes up. So again, the eye test tells us that, we just looked at maybe like 6 examples. I think we saw, what, 1 or 2 losers in there? Pretty good, right? Now, the important question is, and this is the one that I haven't had time to dig into, stops and targets, right? Because there's 3 things you want to know. We always want to know entry, stops, and targets. I would say we know entries, right? We take the high of our mother bar, high or low of our mother bar. We wait for the break and close. We enter next bar market. So we're looking if-then thought process. If price action closes beyond our range, and we know that we define our range being the high and the close of the previous mother bar, then we enter next bar market. That's entries, right? Stops are easy, right? Stops, we can say, we know stops need to be below or beyond the higher low, the opposite higher low of the mother bar. And we can say 10 ticks, we can make it an ATR if you want. You can, that's something we'd have to kind of dig into in the future. But I would be safe to say that you can probably put stops literally right below the lows of that mother bar. From what we've seen and what I've seen so far in the eye test, we don't often spike beyond. If we spike beyond there, we typically lose. So we got an idea for entries. We got a first rule for entry. We got our rule for stop. Now the issue is targets. How do we take targets? And this may not be, here's the tough part, this may not be a strategy where you get a consistent one-to-one. Because we're waiting for that break and close, it's going to vary. So that's the next question. What do we do for targets? An original idea we had was we look for previous structure. However, that's not always the case, because look at this. Let's say we enter right here on our breakout. If we're shooting for previous structure, previous structure high is right here. Are we really looking for a target of this much and a stop of this much? Right? I don't think so. We got to win about 90% of the time if we get that. And structure is going to be in different places each time, so that can be kind of, the consistency is going to be a little hard. Charles says if it were me, I would start with one-to-one stop placement and go from there. Dan says back test it one-to-one and two-to-one risk reward. What's another thing for you guys that have, and don't spoil this one. Don't give the answer, Charles. For you guys that have ever tested, I don't know if you guys have ever tested mechanical systems. What's a dynamic approach to taking another way we can think about taking targets? I like the one-to-one idea. What's another way? I'll give you a clue. We do it with our stop losses a lot, or you see me do it with my stop loss. Fib extension, nope, that's going to be tough because we're breakout, so we're not really going to have a place to draw fib extensions to consistently. Boom, there we go. ATR. A lot of the mechanical systems I used to trade, targets were based off ATR. We had one ATR, or one ATR, two ATR, three, four ATR targets, average true range. And what that is saying is, once we get the breakout, we're trading for an extension of a certain percentage of the average true range. So two things I would write down is, one thing to look for is a one-to-one measure move. That makes it really easy because we just have to be right more than 50% of the time. Another thing is ATR. So let's scroll through some more. And again, this is all the eye test, right? You guys follow me? This is still the eye test. This is still all the thought process that's going through our head, and we just click through. We don't track data. We want to be, I want to get as much information as I can before I backtest, because I don't like backtesting. I don't like backtesting. What I hate more than backtesting is backtesting the same thing multiple times when I don't have to. So I want to have a pretty good idea of what I want to backtest before I do it. But let's look at it. Let's look at this inside bar right here. All right, we've got, again, these things come a lot, as you can see. And it could be filters like with overall trend, but here's an inside bar right here, mother bar. Here's our entry, right? Breakout to the high side. So if we're measuring one-to-one, we know our risk is right down here. I should probably not have a black chart here, but whatever. Here's our risk. If we're going 1-to-1, that's a nice, simple way to do it. 1-to-1, we're looking at targets being right up here. Looks like we just, oh no, look at that. Looks like we just hit targets on a 1-to-1, right? Let's look for another example. Here's an inside bar going potentially to the short side. Again, looking at a mother bar right here, our inside bar right there. We're waiting for a break and close, either up or down. Let's scroll through. What do we get? What do we get? What do we get? Nothing, nothing, nothing. Boom. Break and close to the downside right here. Let's measure out our risk and reward. Looks like the same amount of risk right here. Here's our mother bar. Here's our potential reward. Should probably make this somewhat of a different color. See if we hit it. Boop, 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 boop. Did we? I don't know. Looks like we came very close and got stopped out. Maybe a few pips. And you just keep scrolling through and finding these examples. Here's another one right here. Inside, nope, that's not one. Take that back. Here goes one right here. Mother bar. Inside bar. Break and close to the upside. Risk is looking like this. One-to-one risk reward will put you up here. This one stopped out. So you go through, you test that one-to-one risk reward idea. Just by the eye test, I would go through, also test that ATR idea. Say, hey, what is the average true range on these candles? Forgot where my entry was at. Average true range on this candle was 132. So 132 is looking at a move from 114 to 115.32. Still wouldn't hit it on this one. And you just tested two different theories. Does one look to be working better than the other one? And then once you finish those tests, then I would go into the actual back testing. That's when I would finally break out the spreadsheet, go through the actual back testing, see what your win percentages are, see what your average win, your average loss is, and determine if this is something that is worth trading or not. Then for you guys that maybe are into other things, you could look to add filters. You could say, well, maybe I want to add a moving average. Maybe I want to add a 13-period moving average. And say I only trade the breakout if it's above the moving average. Or I only trade the breakout whether it's below the moving average. Maybe you want to add something like fib dots or parabolic SAR. Something that you can trail your stops. So as the market's going up, your stop isn't consistent. If you're trailing for, say, a big breakout, you're able to trail these things a little bit lower as they go. And you just do the same thing. You add those filters. You eye test it. You keep track of what looks to be working, keep track of what looks to not work, and you come up with that theory. And hopefully that theory ends up working. Dustin says, still not able to access. What's the password, Charles, for today? Do you know? Does anybody know? Oh, there you go. All right, so that's a little bit on inside bars. What questions did you guys have going into this week? I know a few of you are new. Um, let me know what you guys would like me to review. Hopefully we can get. I got 2 trades on today. I got still got the dollar CAD position on from last week. I got filled Aussie dollar too. We're just kind of in these consolidations. Aussie dollar is moving in the right direction. We had the big cipher pattern on Aussie dollar, and then dollar CAD we had the Gartley pattern. So running into structure though, which is a worrisome. But now, Charles, you said you traded this in the past. Did it ever work out for you, or just yeah? So did you get filled? Yeah. I'm long Aussie dollar. We actually spiked past pretty big. We had our orders were at 77.01. We had marched all the way down to 76.80s. Yeah, so I'm long that. You never know. This may not work either. This may not work either. I can tell you the breakout works. The target, that's the issue that needs to be tested. I can tell you when it breaks out from that mother bar, it goes in that direction. The question is how far. that's the part. The question is how far in that direction does it go? And does it go that way? Does it go that far enough times to make it worth it? I got a feeling there may be inverse risk reward in some cases, which is okay. The cipher has an inverse risk reward as well, and that's a wonderfully working pattern. So Dan says I was waiting for the bat down below, didn't get filled. I see it in purple, 76.74. Yeah, that wasn't even a bat on my radar. I'll show you what I didn't like about it. This wasn't a bat that I was looking at. Didn't like the fact this B leg higher than this B leg. Constellation has it drawn out. You guys know I don't trade everything Constellation trades. There's nothing wrong with trading everything Constellation trades. It's just not me. It's just not the man I am. Just not the man I am. Jim says, I noticed that descending wedge in the structure. I noticed the descending wedge in the structure with the cipher. I saw it later into the weekend. The confluence was overwhelming to me. Let's go to lower time frame then. That's good. If the confluence is overwhelming, that's a good thing. There's so many things popping out to you. You talking about this down here, Jimmy? Something like that. Yep. If the confluence is overwhelming, if you're getting, I mean, that's the whole point of the CTS system. We want to take trades where everything is lining up. We don't want to be the trader just to take trades just for the heck of it. Like, oh man, there's a nice looking wick. Let's take it. Or hey, a double top. Let's take it. Oh. I went broke pretty fast just trading double tops. It's very easy. Not all double tops are good. What's the point of a double top if it's not at structure? Nothing. Right? So we just don't want to take the double tops. We want to take the double tops that come at previous structure, that are at the end of an ABCD pattern, which have a Fibonacci cluster on it and a bunch of RSI divergence, right? We want everything lining up in the table. We want, like Jimmy said, where everything's just overwhelming. Like, oh man, there's so much here. I mean, that's what that should be our mindset when we enter a trade, guys. We should look at a trade and say, man, there is so much here, I have to buy it. Have you guys ever seen a trade like that where there's so much there, you're like, I gotta buy this? Like, I'd be stupid not to buy this. That's how every trade should be. Every trade you see you should be looking around and being like, I can't believe price action is still here. Does no one else see this? Like, is this like, is price action really sitting here and giving me a chance to enter? Like, this is too good to be true. Jason always says it should be like, the market puts a bag of money on the table right in front of you and says, take me, come on, just take it. There's no better example than that. Those are the type of trades we should look for. And trades that aren't like that, we should just pass on. If it's not like that, we should say, I'll wait. I'll wait on it. There's no need to get involved in trades. We don't need a million trades. Great examples in the syndicate last week. We only took 8 trades between Jason and myself. 8 trades an entire week between 2 traders. Not a very active week. Didn't lose any money. That's a win. We actually gained some money. Shade mostly on Jason's side. I didn't do much last week. I was basically breaking. But yeah, those trades where everything is on the table, where it's overwhelming, those are the ones we want to make sure we're a part of. Of course, we want to make sure it fits our rules, but those are the ones that are special. Doesn't mean they're going to win. We never know if anybody's going to win or lose. There's so many factors to that, but we want to participate in them. I like that. The confluence was overwhelming. Will you be doing the live room this week since you'll be in Alabama? I will be doing the live room tomorrow and partially on Wednesday. Tomorrow and partially on Wednesday. I could do it Thursday. I just really don't want to be honest with you guys. I've done it before on the road. It's just not the same. So the only time I'll typically plan on doing it on the road if I've missed like a lot of time. Like if I had to take this week off and then next week I was on the road again, I feel bad about taking 2 weeks off, but I'll just run a half week session this week. I'm not going to force anything on the road. So we'll do Tuesday. We'll do a short session on Wednesday, and then Thursday, Friday will be on your own. If I find anything, I'll post it to the trade floor. But short week. Good old Alabama. Woohoo. Then we'll be back the week after that, and then we got then we're gonna be heading towards April soon. Technical Trader Workshop in April. The Death Week. So you guys have no more questions. We've got a quiet group. Telling you, Charles, that break and close above that break and close above makes a big difference. Look at this right here, another one. False breakout. Doesn't get filled. Higher high, higher close. Actually, you can even make it a little bit. That's going to be the same one. Higher high, higher close right here. To the moon. Look at that. Obviously, you can't catch all this, but I'm probably excited for no reason. But look at this thing. Guys, this is 500 pips right here. You notice this, right? You see this move right here? This is 500 pips. Let me say that again. This is 500 pips right here in 8 days. From this break and close above to this. 500 pips in 8 days. Just saying. Just saying. Charles says it's the break and close above. Yeah, the break and close above the high and low to mother bar. So if this is something you want to take on as well, Charles, let me know. I told him I won't have any time to really test this aside from I won't have any time to test this until summer. I've got limited time now, and then we're doing the technical trader workshop, which I'm going to be completely dead from for about a month afterwards. Between that and we're going to have a flood of new 12-week transformation members come in. Yeah, the mother bar. Well, the mother bar. Bull or bear doesn't. The mother bar, bull or bear doesn't determine direction. The only thing that determines the direction is the breakout. So when we get the mother bar, and if you guys are sick of hearing about this, I'm sorry, but no one else had any questions, so I'm going to talk about it. The mother bar doesn't matter if it's bullish or bearish, at least for right now. I'm sure there are filters that can be added in. All I'm worried about is bracketing it, bracketing. There you go. All I'm worried about is bracketing it, and then the break and close below. So this would be an example of a loser. And what you got to pay attention to, is is this a loser just because it's a loser, or is it something that, hey, our moving average is still green? Do we only want to take them? This is a what? We got a 9 period. Let's put a 13. Let's add a 21 period moving average. There's so many things that go. This is why creating systems takes so long, guys. You try to make it as good as you can. You only take it if the 13 is, you only take it in the direction of the moving average cross. So as the 21, is below the 13, do you only take it in that direction? For you guys that maybe have Liberator as well, do you put on the Liberator volatility bands? Do you do something like this? Do you say only take it when it's a certain color? So many things you can add to this. So many things you can add to it. All right. There we go. We got some people flooding in late. Akil, are there times where we go, or times where we go on the Break to Jason's War Room and he mentions a few potential trades or trades that he took, and when we analyze it with you, it's a different story. I understand you guys have different trading style, but as a new trader, it's sometimes confusing. Obviously, I would have to see a specific example to tell you why, but yeah, it's just because we're two different traders. Now, most of the time, here's what you'll see. When you notice that, and again, the question is, sometimes when we take our break, we'll be looking at something in the live room saying, hey, I want to get long pound dollar. And then Jason will be talking about, hey, I'm short pound dollar in the war room, and we're getting two conflicting signals. Most of the time when that happens, Dan, it's because we're on different time frames. Most of the time, Jason is doing most of his trading off a 60-minute chart. So he's looking at the daily as his higher time frame. He's looking at a 60 for taking trades. I work down from my top-down analysis in a live room, but a lot of times we'll take trades on the lower time frame, say the 15 or the 5. Most of the time when you'll see that happen, it's because we're on different time trading. I'm on a day trading time frame. He's on a swing trading time frame. So he's looking bigger picture. I'm looking smaller picture. Now, there are times we'll have opposite opinions, but most of the time when you see that, it's because we're just looking at difference of time frame. So he's looking at something that is going to last longer than what I'm looking at. I'm looking for maybe a brief retracement. Say we got something like this. I'm looking for markets right here. Jason's looking to get short right here. On the lower time frames, I'm looking to get long in anticipation of that bigger structure move. So a little bit of both, but we are different. We are completely different traders. We're completely different people. With that being said, we see most of the stuff the same way if we're on the same time frame. Jason's a lot more aggressive than I am. Typically, I will wait for a little more confirmation than him. He's kind of just, hey, let's take it. I'm like, let's wait a little bit longer. But does that make sense? Yeah, most of the time it's just difference of time frame. And that's what I say. If you're going to be a day trader, guy, really what you see on the daily chart analysis really means nothing to you. I mean, we look at a candle like this. How big is this candle? This one candle right here in the daily chart, 106.50 to 108.23, almost a 200 pip candle. If we're a day trader, we're looking for what, 20 pips? Is it possible to get 20 pips bearish or bullish within this candle? Oh yeah. So the big picture really doesn't mean much at all. The big picture really doesn't mean much at all when you're a day trader. To be honest with you, if I were a day trader, I would care less what's happening on the daily or the 240 charts. It's not going to affect your trading at all. It's good to have a perspective just in general, but it really means nothing as far as your trading. To be honest with you, the 60-minute is going to be your higher time frame. Jimmy says, but yeah, Jason is more aggressive than me. And I'm sure he has a lot more experience than me. I'm sure I'll be there one day. I'll just get tired of waiting and be like, whatever, I'm so confident, let's just take it. I've already started. If I was a lot more conservative a couple of years ago. I could not take a trade unless it had a double top with the RSI overbought with divergence. And I missed a lot of trading opportunities because of it. So we tend to get more aggressive as we get better. Jimmy says, when there's a breakout of a wedge, flag, or pennant pattern, do you look for targets at structure? Yeah, either structure or Fibonacci extensions, depending on if there's structure or not. Sometimes there's just no structure, so either structure or Fibonacci extension. So if we get like a flag pattern like this, we get a flag like here. We can look for targets at either a retest of structure right here, or bring in a Fibonacci extension, swing low to swing high of that flagpole, and look for targets, say right up here at a 127 or even a 1618. Of course, being aware of if there's any structure looking left as well. But I will. Structure is always my first. My trading philosophy is based on structure. So structure is always my first. The first place I look for. And again, I'm not a big trend continuation trader either, so I'm very non-aggressive with my targets. It may not seem like compared to what you guys are doing. I'm not aggressive at all with my targets. I want to get my money. I want to get my money off the table as quick as possible. With second targets, I'll tend to be more aggressive with second targets. First targets, I want to get a little bit in my bank as quick as possible. Get in my wallet. Do you guys trade a lot of pennants and wedges and simple patterns like that? Or thinking about it? Another breakout, Charles. Another breakout, Charles. You get a loser right here. Here's a loser. Yeah. Here's the issue though. You get something like this. Actually, this one's not too bad. I would say when you lose, you lose pretty big, but this isn't that bad. This loser is only about loser. 125 pip loser. That's not bad for a daily chart. Look at that, another one. Inside bar. Inside bar. Sell it right here. All right. If you notice a pattern that you're filled on and then a flag, trend continuation pattern period, would you look for a graceful exit or wait to be stopped out? Once I'm in the pattern, all I care about is being in the pattern. I won't adjust anything. Once I'm involved in the pattern, it can wedge, triangle, flag, whatever. I won't adjust my trade at all. The only time I will adjust it is if a second pattern forms. This is rare, but if a second pattern forms within the pattern, and I'll typically adjust targets for that. So I don't even know how to draw an example of that. I guess if we had a Gartley like this, and we're looking something like that, right? Gartley pattern, and our targets are right. What here? Only time I would adjust is if maybe I can't. It's hard to find an example. Maybe we set up something where a Gartley would be like right in here. Then I would adjust a little. I don't know. This is a bad example, but no, I won't. If I see a flag or a pennant, I just trade it how it is. I don't adjust. I value advanced patterns a lot higher than simple patterns. Do you notice those patterns a lot? I do notice those patterns a lot, so it does interest me if there is a heavy confluence with structure or advanced patterns. I still have to do back testing, forward testing to determine if they're valid to use. I don't know. I'll tell you this. I only trade them. I personally only trade them if they're at structure. I'm not a flag or triangle trader. They're technically not in my trading plan. If they come into structure, I can trade them in structure based trades. I don't just trade random flag patterns. So I won't do anything. If I just see the market, if the market just comes up like this, I really don't care. Only time you'll see me trade them is if we had something like this. Say we get a breakout like that, and then we get a flag pattern that comes back into structure. Then I trade it as a structure-based trade, basically a trend continuation trade. But I don't trade them by themselves. I don't actively look for wedges and triangles and stuff like that. Only if they line up with a structural level that intrigued me to begin with. Doesn't mean it's bad. I see a lot of them that break out. I just don't. It's just not in my trading plan. Yeah, so don't. I don't want to make it seem like it's a bad thing. They're just not my. I won't say not my cup of tea. I just don't have a plan to trade every single one. But if it lines up with structure, then we can make it work. But these things happen all over the place, especially when the market's trending. They happen all over the place. Anything else? Another one, Charles. 300 pips. Obviously, you wouldn't get all 300 pips, but anything else, gang? All over the place today, but that's the fun about Q&A sessions. Here's a loser. Nope. Yep. Here's a loser. Found the loser. Look for the. That's another thing, guys. Whenever you're back testing, look for the losers. Try to purposely look for losing trades. That's the best thing you can ever do. Look for losers. A lot of time, we only want to find what's going to make our system work. So we kind of turn the blind eye to losing trades. Look for losers. Try to find as many losers as you can. But if there's nothing else, we'll call it a day. If you have any questions that you maybe were afraid to ask or didn't want to ask, shoot me an email. Feel free to. But you guys should be bringing questions to these Q&As. Again, they're different. Back the first round when we did 12-week transformation, we used these Monday sessions were training lessons. That's because we opened up the course 1 week at a time. They're not specifically training lessons anymore. It's an open course, so we have people signing up at all different times. We have people signing up during the bulk sales. We have people signing up last week, this week, 2 weeks ago. So everyone's at different spots in the course. So no longer are we dedicating a Monday to say, hey, today is trend continuation Monday. So it's up to you. It's up for you guys to bring questions during the week, saying, hey, I saw you do this during the week. You kind of went fast through it. Can you, can you recap it, or can you tell me why you did this? Or hey, had a question about pennant patterns. Saw that you took this one but didn't take that one. Can you talk a little bit about your filters? And those are the questions that you guys should be bringing. And feel free, either write them down and bring them on Monday, or feel free to shoot me an email to say, hey, Akil, I got something that I noticed you did today in the live room. Can you talk about it in more detail next Monday? I keep track of those things. So again, if you're getting everything perfectly fine, then that's good. It just means we're doing a good job here. But this is the time, aside from the live room, where you get kind of more of a personal one-on-one type of Q&A. So don't be shy about it. There's no such thing as a dumb question. So just bring it. Anyway, until next time, I'll see you guys tomorrow in the live room. Plan your trade your plan. Hopefully, I got you. You guys shouldn't be worried about this inside bar thing. You can see I'm pretty excited about it. Just thinks that I won't have time to really dig into it. But Charles has no life. He doesn't. He just sits around all day. So maybe he'll do it. But certainly something that looks like it could be okay. Like I said, the hardest thing would be getting those specific rules for targets, finding that right mix where you're getting enough out of it. You're not shortchanging yourself by missing out on the big moves because you may need that. But you're also not getting too greedy that you're leaving a lot of profit on the table. But I will see you guys tomorrow in the room for some live trading. Hopefully dollar CAD and Euro Aussie pan out in our direction. And until next time, plan your trade, trade your plan. Have a great rest of your day.